Welcome to the goldsilver.com Knowledge Center webinar. Today, the goldsilver.com Knowledge Center agenda includes the 21st century global gold and silver bull market, currency versus money, the American dollar debasement, silver and gold fundamentals, your product and percentage mix, and we'll close with contact information. This 21st century bull market is worldwide, and people everywhere are investing. In the last gold rush in the 1970s, only North America and Western Europe were able to participate. Gold ownership was either illegal, not available, or not in public demand in Eastern Europe, Russia, China, India, Mexico, South America, Asia, and the rest of the world. Now the market demand structure is completely different. The entire population of the planet is a potential investor. And as you know, with the internet, one can make investments with one or two clicks of a button anywhere in the world. Today there are billionaires and highly affluent investors in Mexico, India, China, South America, Africa, and Russia. And the best news of all is that this time around, the entire world is chasing the same limited supply of gold and an even smaller supply of silver, with much more fiat currency and more credit in circulation compared to the last bull market. But first, we must define the difference between currency and money. What is currency? Well, currency is a circulating medium of exchange. This means it is an intermediary used in trade to avoid the inconvenience of a pure barter system. It is a unit of account, which is a standard monetary unit of measurement of value for the cost of goods and or of services. It is durable, which means it has a long, usable life. It is divisible, which means it can be divided into smaller amounts. It is portable, which means it is easy to carry. And it is fungible, which means that each unit is capable of mutual substitution, meaning that each unit is of equal value. The dollar in your pocket has the same value as the dollar in my pocket. Now, money is all of the above, with one major difference to note. Money is a store of value, which can be saved and retrieved at a later date and at a later time, and can be predictably useful when it is retrieved. Currency is designed to lose value, while money is designed to store and hold value. Silver and gold have been money for over 5,000 years and will forever be coveted by human beings. Fiat currency, we've heard that term before. It's money that has value only because of government decree or regulation or law. The term is derived from the Latin word fiat, which means let it be done. As such, money is established by government decrees. No fiat currency has ever survived. They all end worth less than the paper they are printed on. Their average life expectancy is 40 years. The fiat Federal Reserve note, that's what we call the US dollar, has been fully fiat for 40 years, and we believe it'll be gone by 2020. The American dollar debasement. Have you ever heard of quantitative easing? Quantitative easing is simply printing or creating dollars out of thin air. Every time you hear the expression quantitative easing, or QE, or QE1, or QE2, or QE3, just simply understand that those are programs where they steal your hard-earned savings by diluting your dollars with their printing presses. Eventually, this expansionism of our currency supply pool, which we call inflation, inflating the currency supply, is inflation. As a result of inflating the currency supply, prices increase. Prices are not inflation. Inflating the currency supply is inflation. So let's examine the effects on the dollar since the inception of the Federal Reserve in 1913. Here we see the U.S. inflation rate go up to the last vestiges of dollars tied to gold. In 1971, President Nixon removed the dollar from being tied to the gold standard. This arrow points to that time. This is what inflation looks like since the gold standard has been removed from the dollar. Let's take a real-life example. Let's look at a can of Campbell's soup. It was pretty consistent up till 1971, when our currency was still backed by gold. But since 1971, after we left gold, the price of a can of soup has spiked dramatically. What has changed? The quality of the soup? I don't think so. The quantity of the soup? The can's the same size. Neither. Simply a vast increase in the amount of dollars chasing cans of Campbell's soup. The bottom line is fiat currencies are designed to lose value, and inflation is the hidden tax we pay for those who issue our currency. Gold and silver can protect your wealth from inflation. Over the last 10 years, the price of gold has rocketed from less than $300 an ounce to today over $1,500 an ounce. Look at this. This is the classic bull market chart. Nothing looks like this. And over the last 10 years, the dollar has taken a decline, as seen in this chart. And if we superimpose the two charts, we see that gold and the dollar have moved in opposite directions. Gold is moving up, and the dollar is moving down. Why? Well, gold is money, a store of value over long periods of time. And the dollar and all other fiat currencies are not money. They are destined to be worthless. Let's take a look at some gold and silver fundamentals. Here we have a Boeing 747 jet airliner. Well, just for grins, look at the size of a man. Here we have the size of all the silver ever mined in the history of man. Here we have the amount of gold ever mined in the history of man. Today we can see the amount of silver and gold that is currently available for investors. Notice how the silver is becoming a scarce commodity. Why is that? Did you know that in today there is less silver available for investors than gold? How is that possible? Well, gold is primarily used as a store of value and secondly as jewelry. Silver is money and has been so for 5,000 years. But silver is also a miracle metal. It has thousands of industrial purposes. Silver is the most electrically conductive, thermally conductive, and reflective metal on the planet. Silver has antibacterial qualities, which is why it has been used in silverware for many, many hundreds of years. It is this antibacterial quality of silver that which science is inventing new patents for every year. Silver is also heavily used in solar power production and water filtration. Other silver uses are investment-grade coinage and bullion bars as stores of value, silverware, photography, jewelry, electric circuitry, batteries, plastic toothbrushes, dental work, DVDs, iPods, manufacturing, and medical products. The computers we are looking at all have silver in them. The light switch you flip has silver in it. Basically anything with an electric current uses some amount of silver in it. And without silver we would not have our modern lifestyle. We use more silver than is mined every year, and over the last 30 plus years the world has literally thrown away silver into the landfills. The amount of silver above ground has dwindled to record low levels. We have a lacking supply on a must-have commodity for our modern way of life. Silver has been money for over 5,000 years, and today the world has a threatening currency collapse at its doorstep. The bottom line is we think $30 silver, $40 silver, $50 silver will all be sorely missed by investors moving forward. Our founder, Michael Maloney, believes silver's price potential is in the hundreds, if not possible thousands of dollars per ounce. And you can find videos of Michael talking about the possibility of $1,500 silver online at goldsilver.com under the video section. For 5,000 years, the exchange rate of silver to gold has been 12 to 1. Currently, there are 6 billion people on the planet, 2 billion ounces of gold, and less than 500 million ounces of silver. If wealth were distributed evenly, everyone on the planet would receive 1/3 of an ounce of gold and 1/14 of an ounce of silver.